name is John Lee. I'm the founder and CEO of FLYN Nickel Mining Corp. And after over 20 years of experience in mining, the first 10 years as an investor, the second decade is trying out as a mining CEO. Over the course of the last 13 years, I've raised over $150 million through the Toronto Stock Exchange and Toronto Ventures Exchange for junior companies. And my specialization is nickel. So I'm probably one of the very few CEOs that had done several nickel deals in the past decade.
Right. Okay. Well, John, lovely to meet you. First time we've met or spoken. So appreciate you coming on the show. We're going to talk about FLYN Nickel today. You're also CEO of Silver Elephant. Is that right?
That's correct. That's the parent company of FLYN Nickel. And FLYN Nickel went public only just this time last year, and it came out with a bang and about $100 million market cap at the peak of that nickel bull market that went to $50, as you recall.
Yeah, I do. Yeah, went a little bit crazy. I think the LME had a little bit to do with that. Look, let's kind of focus on the nickel story today. So, how did you pick the deal up? Give me the backstory.
Pick the project. Well, Matthew, as I said, I started mining investment back in early 2000 and started mining. So like every retail junior investors, I've invested in hundreds of companies, traveled 35 countries, and done dozens of project site visits. And my interest has been nickel, and I've researched all the nickel projects in North America, the Duluth complex, the ones in Yukon, the Manitoba, in Sudbury, and Minago has always been my favorite. Unfortunately, the project was not available until early 2021, and that's when we acquired the project for $15 million. And there's many reasons I like about the project, which we can talk about. It was Silver Elephant that acquired the project in 2021. And then subsequently, a year later in 2022, Silver Elephant spun out Minago into a company called FLYN Nickel, of which FLYN Nickel raised $8 million and did a number of programs last year. And here we are a year later.
Well, tell me about the deal structure. Obviously, Silver Elephant picked it up, and you've spun it out into a new vehicle. What were the terms of that agreement, and who were the beneficiaries in terms of your existing shareholders and new shareholders?
Right. Well, certainly, Matthew. First, Silver Elephant acquired the Minago project for $15 million Canadian in cash and Silver Elephant shares. And subsequently, in 2022, Silver Elephant spun out Minago into FLYN Nickel. So today, FLYN Nickel owns 100% of Minago, and the FLYN Nickel shareholders is approximately it's approximately about half the FLYN Nickel half of these shares. So let me backtrack a little bit. FLYN Nickel and Silver Elephant share common shareholders. 50% of the FLYN Nickel shares are owned by Silver Elephant shareholders, and then the other half of approximately the other 40% of the FLYN Nickel shares is owned by another company called Oracle Commodity Holding. And it's a little convoluted, but in essence, Matthew, instead of Silver Elephant keeping that 40% of the shares that it didn't dividend out to Silver Elephant shareholders, Silver Elephant transferred that remaining FLYN Nickel shares to another spin-out company that focuses on investment.
Right. Okay. And who are the owners or beneficiaries of that company then?
Oracle Commodity Holding is a reporting issuer. It's not yet public, and the shareholders of Oracle was spun out from Silver Elephant. So Silver Elephant shareholders of Oracle Commodity Holdings.
Right. And how much of all of this do you own?
I've been around Silver Elephant for 13 years. I started out my ownership at around 30%, but I'm down to around 5%. I participated in every single round of every single one of the private placement. As you know, Matthew, investment in junior companies is all about timing, and we've been through a decade of consolidation and sort of a bear run, and now it looks like finally the corner has been turned. So right now I own about approximately 5% across the enterprise.
Across the enterprise, being Silver Elephant, FLYN Nickel, and Oracle.
FLYN Nickel and Oracle.
Gotcha. Understood. Okay. Right. And then if I'm just looking at the FLYN Nickel share register, what does that look like? Is it mostly retail, or others involved?
Right. So approximately 40% of the FLYN Nickel shares is owned by Oracle, which was spun out from Silver Elephant, and the other 60% are Silver Elephant shareholders, as well as the $7 million IPO round that FLYN Nickel did at early 2022. And it was actually mostly participated by institutions. So we do have two cornerstone investors. One is Blackstone Minerals, and they are a ASX-listed junior nickel mining company whom you might be familiar with,
them, yeah.
Scott Williamson.
Yep.
And then the other cornerstone investors is Sparta, which is an institution, German funds that specializes in mining investments.
Got it. Okay, so I was just trying to get the makeup.
Sparta and Blackstone own around 10%, partially diluted.
Gotcha. Okay, right. We've got a better understanding of what's going on there. Okay, well let's kind of and I'm sure when we talk in the future we can get into the weeds a little bit more with that and how you see that evolving, because you'll be presumably raising more money in the future and looking to change the makeup of that share register. But let's talk with the project stuff. We've had a look. It looks quite an interesting project actually. So with regards to your plans for Minago, what do you intend to do with it?
Right, I think, Matthew, just to cap the previous question, there are about 70 million shares outstanding. Around almost 70% are owned by insiders and institutions. So it's a very, very tight share structure. And I think to answer your questions about the plan, it's important to sort of backtrack a bit on what the project has been through. The project's been through over $40 million in investments, and by various different operators, including almost 85,000 meters of drilling, a feasibility study. And the project was fully permitted, which means all the baseline environmental studies have been done. So in terms of so you can look at this as a 100-meter race to getting a project fully permitting status. We're almost like 95 meters there already. And what's left up from here to say early 2024 is the rectification of the environmental act license, which we're undergoing right now. And then a month ago we already signed off the environmental impact benefit agreement with the First Nations. So that is a final binding agreement that governs the terms and conditions of our operation and our relationship with the First Nations throughout the entire life cycle of the mine. And the last but not least, we're updating the feasibility study to incorporate that PGM angle that recently came out of the news release, and also updating the various different parameters. And so the permit, the feasibility study are on track to be delivered in this year, and which means that Minago and FLYN Nickel is one of the very few projects in Canada that is ready potentially to make a construction decision this time next year.
Right. Okay. So significantly advanced. We've looked at the kind of the drill results, etc. And like I say, it looks like quite an interesting project. But you wouldn't know it if you looked at your share price and your market cap. Obviously, the market hasn't kind of cottoned on to where you're at the moment. So, as well as kind of completing the feasibility study and obviously advancing the permit. Is what do you feel you need to do to kind of get people interested or re-engage with this asset and therefore your company?
Yeah, Gordon. Sorry, Matthew. The project, like I said, it is one of my favorite projects. I've owned Lynn Lake, Shakespeare, Well Green, so I'm a bit of a seasoned veteran in the nickel space. Minago has a very few unique and exceptional attributes. It is an open pit optimized project. And at 1 billion pounds of nickel and grading at 0.74% nickel. Matthew, 0.74% used to be the average benchmark 10 years ago. But today, the average mine grade, head grades for nickel sulphide project in Canada is 0.4, which makes Minago head and above shoulders amongst our peers, either greenfields or the ones in production. And further research indicated by 2027, 2029, that grade is going to go down to 0.25, which makes Minago's grade 3 times more. The project is in the Thompson nickel belt, which means it has immediate access to power and water and road. So we do envision the capital expenditure would be quite manageable. And last but not least is that the project is in Manitoba. That's 99% hydropower. So we are 3 times greener than Sudbury, and up to 100 times greener than the laterites in Indonesia and in the Philippines. So you guys, I imagine, I'm sure your audience is well aware of the difference between laterite and sulphides. They're an entirely different animal. And to answer your question, so that is the technical aspects of the project. And Matthew, Terry's question is, the project is, we're churning over great volume. We're churning 10 million shares in March alone, which is around 15% of the overall shares outstanding. So we have pretty much the complete turnover of our float already outside of the institutions and insiders. I think what happened was, it's not really within our control that when the company went IPO in March, nickel was $50 a pound. It went from 10 to 50. And then we're trading tremendous volume, and then subsequently sort of everybody's on its way trending down, and we're no exception. So that created a little bit of a void, because everybody who wanted to get in, who understood the story, who know the merit of the project, who know the sort of uniqueness of the project, already bought in. And then we ride this trough through this painful duration of about a year. And then coupled also that, Matthew, as we mentioned, a lot of the FLYN Nickel shareholders are silver elephant shareholders, and these are silver investors. So they're really not very sort of, in tune with the nickel market. So I think that anybody who wants to throw in their towel already did. And one of the things we like to do is we're executing our technical programs and permitting program very well, is to make sure that we communicate this investment opportunity with the investment community. And that's why I'm very glad to be on the Crux Investor for the first time.
Right. So I think you've mentioned it once, but just in case people have missed it, the scale of the opportunity, you talked about the grades, the scale of the opportunity as laid out by the 43-101 is what?
It has a resource of 50 million tons, grading at 0.74% nickel. So in terms of in situ nickel metals in the ground, is around just over 1 billion pounds. And of that, 3/4 is in the measured indicator category, and 1/4 of that is in inferred category. Matthew.
Okay, and again, what I know it's 43-101 stage, and you're coming. In fact, what is the timing for the feasibility study? You said this year, but when are we looking at?
Feasibility started almost a year ago. So what happened, Matthew? As a question, we expect to have the completion of the feasibility study this year, towards the end of the year. And what happened was towards the end of the feasibility study, we did a run of a validation metallurgical drilling by ourselves, since we acquired the project in 2022. And when the assays came out in August, September, we found a lot of PGMs. Every single drill hole, we had platinum and palladium, some up to 1 gram, which is around, $40, $50 a ton. And that's quite material. It's almost 10 to 15% of the gross metal value of the deposit. So I asked our team to look into it. It turned out that the previous guys only assayed for 20%, assayed for PGM for 20% of the drill holes, Matthew. So which means, and because they were focusing on nickel back in 2010, when nickel was $20 a pound. So what we're doing is we're taking out representative samples. We're not drilling right now, but we're taking representative drill core samples from the core shack, selectively assaying around 7,000 meters of cores, which is additional 10% of the drill holes. And then with that, we're very optimistic at coming up with a PGM resource to complement the existing nickel resource to complete our feasibility study, to make sure that feasibility does fully reflect the potential of the project.
Right. Okay. So there may be a nice, it's clearly a nice byproduct, but also credits for you down the line, and the feasibility study will reflect that. I know you raised a little bit of money in February, $859,000 or so. Are you funded to be able to deliver the feasibility study by the end of this year?
Right. Matthew, the answer is probably not. The use of proceeds is going into completion of the assay program, which is going to cost about $350,000. I mean, as opposed to if you were to drill for 7,000 meters, it would cost you probably in the vicinity of about $3 million. So I think it's a very good use of proceeds. And secondly, we didn't want to. I mean, the entire $800,000 was subscribed by institutions, and Blackstone Minerals and Sparta came in, and existing shareholders. So we could have raised a lot more with them if we wanted to sort of complete a 2023 budget, but which is not to minimize dilution, because right now we're trading at, gosh, 24 cents at 70 million shares outstanding, $14 million market cap. Is less than the price at which we bought for the project. It certainly is a fraction of the investment had gone into the project so far. So I think what we're doing is we're trying to sort of watch our purse and wait for the assays for the PGM to come out. And initial set already came out a couple of weeks ago. I think the results program received, and the stock had a bump already from 13 cents to 20 cents. And then probably towards the June or July timeframe, we'll be looking for maybe another opportune window to do another raise. And then that second raise would then enable us to not only complete the feasibility study, but also helps to get to a construction decision towards the early part of 2024.
Right. And what's the end game for this? Obviously, get to the feasibility study. I mean, just looking through the people on the team, they don't look like they're mine builders yet. But is your plan to then, flip this thing onto someone else, or bring in someone with bigger balance sheet in?
Well, Matthew, this is standard questions, and you have a standard cookie cutter answer. And the answer is we keep our options open. A lot of that is going to be market driven, both in terms of the nickel price and in terms of the equity market. So, but definitely what we're doing is to de-risk the market from a feasibility study. And that's not going to be a desktop study. It's a consortium of Mercator and a track Lycopodium. So it's well-known mining-oriented engineering group. And we're getting that permit sorted out. And in terms of the staffing, actually, Matthew, we recruited our chief operating officer was based in Thompson. He worked for Ballet. He's a Korea Ballet person, used to be Inco. So Minago is his backyard, and there's a lot of talents to be had in Thompson through the early retirements of a lot of people that Inco and Ballet had let go. And we also are working with a permitting person by the name of Doug Ramsey, who's got 40 years of experience, oftentimes represent the government in Manitoba and the First Nation. So I think that in terms of what we're doing, we're laying the foundation to lay the path to production, construction. So this is not a window dressing exercise, but the question is who's going to sort of lay the bricks and pour the cement. It will really be, like I said, the factor of the options that available to us. Obviously, right now our market cap is not conducive. But then, as you know, these junior companies can move quite up and down quite quickly. Not even a year ago, with $100 million market cap trading at $1.40. So that's not to say we cannot go back in. So I think eventually, if our market cap, if opportunity open for us to do equity and debt financing, or joint venture partner where maybe resort to a minority shareholder, or if shareholders see a good price of offer that comes along, we're certainly will be there to entertain all options.
Right. I mean, okay, I get all options on the table, but it doesn't necessarily need to be a cookie cutter answer. We've had CEOs come on here and talk about value destruction if you're looking to kind of get into production, because the cost of capital right now, and off the back of a high inflationary environment last year, and that's still there apparent this year, is you don't want to destroy shareholder value by going and raising expensive capital. And sometimes companies aren't best suited to do that. So, companies being clear about the fact that they're going to flip this onto someone else is fine to do. There's no problem having that conversation, and it says, I'm not going to dilute you, but what I do need is more time to show the market the value of the scale of this thing, the grade of this thing, and I think that the feasibility study might be that catalyst moment. So it's just some companies are sort of clearer than others because they're a little bit more confident than others, and that's why I asked that question. But it's clear that you want to kind of keep your options.
Yeah,
on the table
Matthew, you raised some very good points.
Market cap is not where it needs to be, right?
Yeah, I think really some very good points. One of the areas I'd like to sort of bring up is the potential for additional discoveries. We're talking about Thompson Nickel Belt, which is the second largest nickel camp in North America, and still today is in production by Vale. FLYN Nickel owns 197 square kilometers of space with several magnetic anomalies that are very similar to the Minago nose deposit discovery, where 95% of the drilling had been concentrated on. So I think with a bit of exploration efforts, it's quite conceivable to have multiple nose discoveries where our resource reside. And secondly, Matthew, I've been around for 20 years. I've owned several juniors that went under because they had some teething issues with the production, and there's covenants that came in. Their hash book blew up. Like I've had over a dozen companies that went to zero. And so you're talking to a CEO who's quite experienced, and we have some projects developing in Mongolia, in Bolivia. We had been discussion with different traders. A lot of the devils are in the details, Matthew. Depending on how you structure your project financing, what you put up as collateral, the terms for your equity and debt financing could spell quite a bit of difference in sort of protecting the assets in the long term. And Matthew, I watched for Minago since 2009, so it's a plan that's well conceived, sort of well planned, and certainly not gonna sort of let my baby slip just because we're not so careful in terms of putting together a project financing. That's not that sort of doesn't have a fallback plan.
Honestly, again, it's that kind of conundrum that CEOs have, which is, especially when you've kind of got, 43-101 here, you kind of feel under pressure to kind of advance that through the phases, through the economic study phases, to the detriment of the growth side, which is the drilling component, which may show this thing has, more legs. I say, more discoveries to be made out there. That balancing act is a tough one for sure. Can I talk about the you've got an NSR on this thing? Xstrata Canada Corp have got a NSR of between 1% and 2%, depending on the price of nickel. Over 3 quarters. Does that kind of reduce your ability to come up with kind of creative ways of funding things going forward, or do you think that the nickel market is going to be strong enough and this is an attractive enough asset that money should not be a problem?
Yeah, Matthew, it's great to be talking to an experienced interviewer. I just want to bring up the earlier point. We don't have the crystal ball, and it's a delicate balance to expand resources versus a feasibility study, which is maybe less sexy and generate less appeal because you have to wait for the results. But what we can do, though, within our control, FLYN Nickel, is to open ourselves to prepare our data room. So we have 1 terabyte of data. We have a state-of-the-art data room, and then we also are knocking as many doors as we can. So that when we believe that nickel is 20% from the top, which right now I think is 20% of the bottom, it's nowhere near the top. But when we feel the top is near, then we will be able to sort of get as many people onto create a bit of a competitive tension so that we can get the best deal possible. So that's what we need to do. So we're not married to one or two sort of sweethearts per se based on prior relationships. Like we're treating everybody equal. So right now we're discussing with over 10 strategic players. Majority of them come to us and solicited. I can tell you, in my 20-year mining career, I've never seen anything like it of the people that are planning for nickel, needing nickel past 2030. So that is something that, like I've never seen before. And go back to your question. What's your second part of the question? I have to be beg pardon.
Well, it was really around sort of, the fact that, you've got Xstrata Canada Corp right. With the between NSR. 1% and 2% NSR, right? Does that restrict your ability to kind of get creative financings going forward or alternative financings?
Right. Matthew, the Glencore used to own the majority of the project. So Glencore's NSR on Minago is on a token edge of the resource. It accounts for less than 5% of the resource. So that NSR is not material. However, Oracle Commodity, which is the other investment spin-out of Silver Elephant, does own 2% of the Minago NSR.
Right.
But that NSR is not going to be triggered until $15 nickel. So to address that question, Matthew, specifically on the NSR cannibalizing the economics of the project, we deliberately set up the structure so that there's no NSR on Minago on the majority of 95% of the resource until nickel goes over $15.
I think I saw in the 43-101, it's like 13,250 or something like that. It's the number for 2%, and anything under that would be a 1% NSR. Does that sound right?
No, Matthew. Under $15 is zero.
Okay.
But the NSR referred to is by Glencore. And Glencore, that NSR only applied to very small area of one small claim. of which occupies around the northwestern edge of the deposit. That will account for 5% of the nickel resource. So I wouldn't say that NSR is anything material.
Okay. Interesting. And just a little bit on the macro, because you touched upon it there. You've got, perhaps people, as you say, who don't, maybe some of the silver shareholders, they read things like, LFP batteries are going to dominate nickel. This EV market for nickel isn't going to be there, or what else? What are the other things, like, Indonesia will just turn up the volume and just flood the market, and all of these kind of concerns about the future of nickel. How do you see the future of nickel?
Well, Matthew, I think that there's always two sides. The glass is always half full, half empty, depending on who you talk to, how you feel it, who you ask. Let's look at the industry insiders. Okay, Elon Musk 3 years ago say mine as much nickel as you can. We're going to give you a giant fat contract if you can mine nickel responsibly, and that was nickel was $8 a pound. And subsequently, nickel went to $50 a pound. Okay, some of the speculative driven, but such kind of violent move cannot be solely by speculators. So there are definitely people that are accumulating nickel. Then, Matthew, if you look at other industry insiders, BHP is coming out of Australia. I mean, Australia is full of nickel, and you don't see a lot of Australian outfits coming out ashore Canada, and they're bidding for Norway, which is $400 million, and have to spend another $3 billion. And then they were outbid by Wylie. And then if you look at some of the other nickel mining outfits like Glencore and the Japanese, they're exiting.
I think Mincor also got an offer in a couple of weeks ago as well. It's got nice in terms of peer analysis.
Yeah, and if you look at BHP, the mining companies, they are going ashore to buy Canadian nickel projects that are 5 years away from production, and you violent nickel move right now is 10 to 50, now it's back to 10. And then if you look at some of the Indonesian laterite and Philippine laterite, Madagascar laterite producers, Vale is getting out of Madagascar, and Sumitomo is getting out of Philippines, and these are multi-billion-dollar project that has underperformed consistently, and then the tailings go into the ocean. It has the highest factor of carbon emissions, and I think we'd be shooting yourself in the foot to be buying nickel from laterite to be going into EV batteries. So I think that's the first. The industry insights are telling you very loud and clear. And from the intelligence that we get from the battery manufacturers and car manufacturers, they are sourcing nickel for 2030 and after 2030. Because I was very straightforward. I said the earliest I can get nickel is 2028. They said, John, you're one of the earliest guys that can get into production from the 10 or 20 outfits that we've talked to. So if they're planning out for 2030, 2035, that means that there must be a need for nickel. I think on the LFP, Matthew, like I said, I studied nickel. Nickel is one of my forte. LFP is actually beneficial for nickel. And the reason is this, Matthew, if all the EVs have to use nickel, and then even if the future projection of EVs are any remotely correct, some say 40%, some say 60%. If you peg it right now at 20%, even just 20%, if all the EVs need nickel production need to double. And that is an impossibility. So it's actually a great ideal mix. You have the LFPs, there are the Volkswagens and the Hondas, the sort of the vanilla family vehicles, and then you have the MNC A11, the nickel batteries that goes into the Lamborghinis. I think that is a perfect example, and that's exactly how the market is shaping out to be. And you know what, Matthew, the difference between the LFP batteries and the nickel battery is in the orders of thousands of dollars. Like even if nickel went to $40, you're looking at a battery that takes about up to 60 to 100 pounds of nickel. So that's an order of $2,000 to $3,000. Matthew, if you buy a Lamborghini, your carbon trim, right? Your door plate just costs you $3,000. So I think that this nickel MNC 11 standards is already to be standardized for high performance car and high performance vehicles, and it has its own place to stay. I think it's a great unique mix up between LFP and nickel. Not to mention, just one quick point, we see the rollout of the Hummer, and then you have the cyber trucks, and I mean you're gonna need hundreds of pounds of nickel. So I think if anything, I'm not so concerned about the demand for nickel, but that's the sort of the lack of demand for nickel. I'm actually more worried about the excessive demand for nickel that drive the nickel prices too high that will accelerate the substitute for nickel, which might come out, it's all way out there in the 2030s. Then that is sort of the roadmap being shared with us by the auto manufacturers, Matthew.
Yeah, no, we talk about it on a weekly nickel show, but it's sort of amazed at how often that keeps sort of coming back, and people's view on what the triangle of Philippines, Indonesia, and China could do to the Western supply. But I agree with you, of course, the kind of clean nickel is going to be in high demand. Well, look, John, a really nice introduction to the story. I appreciate your thoughts on the macro, but I like what I see in terms of the asset. Really a case of, down to you now to deliver into the market and get people, listening to this story.
Well, Matthew, right now, we're seeing FLYN as basically baby get thrown into the water amongst all the nickel juniors. And, we welcome, I'm pretty active in Twitter, and the company's home site is flynickel.com. The technical report is there. We have a great team together, and the project is on the cusp of making a construction decision. The grades are 3 times higher than our peers. And, we invite your audience to do the research and check us out.